Hello everyone, welcome back to our channel. But if you're new to this channel, please click that subscribe button and your like button so you can help this channel to grow. In this video, let's talk about the upcoming IPO of Snowflake Incorporated. Yes, you heard it right. Snowflake Incorporated, a cloud-based data platform offering a virtual storage or warehouse, computing, and cloud services, will be having its initial public offering this week, probably on September 16, 2020, having a whopping valuation of $28.2 billion as it planned to raise amounting $2.24 billion for 32.2 million shares, including 4.2 million shares that underwriter has the option to purchase at price range of $75 to $85 or a midpoint of $80. What makes this offering special is that Berkshire Hathaway will purchase a total share of $570 million, while Salesforce will take an additional investment amounting $250 million in a private placement, for a total amount of $820 million, which might be the reason why this IPO price is set at this expensive price point. As a result, the company will be traded in a high price-to-sales ratio of more than $40. Prior to this IPO, Snowflake, to be listed in New York Stock Exchange in a ticker SNOW or SNOW, had accumulated a total funding of $1.4 billion from 13 investors, with the latest Series G financing of $479 million courtesy by Salesforce Ventures, Dragoner Investment Group, and Meritic Capital Partners, which by substance actually is being recognized in their financial statements as convertible preferred stock. It just shows to us that the confidence of these investors on this growth stock or growth company is great. Thanks, Snow will start trading above $100, which could reach to as much as $160 from its midpoint of $80, considering the case of its fellow tech company BigCommerce, which IPO price of $24 surged to $67 at the open market last July, knowing the euphoria or the hype given by Salesforce and Warren Buffett. But what makes Snowflake having this kind of valuation and attraction among investors? Knowing the fact that it had accumulated deficit of $871,597,000 as of July 31, 2020, or a net loss of $171,276,000 in Q2 of 2020. Or for the fiscal year January 31, 2021. Though a significant improvement of these losses of $5,871,000 when it incurred a loss of $177,224,000 on the same period of last year. So what makes this cloud native SaaS platform attractive then? Somehow, Snow has competitive advantage over its competitor because its database is running on SQL database engine with outstanding features such as diverse data type of capabilities and data volume scalability, dynamic availability of compute resources, secure and governed access to all data, near zero maintenance as a subscription as a service company, in which no maintenance cost among its customers. Further, pricing of Snowflake is depending on customers' usage or needs on storage and computing. It gives Snow a value proposition that even just a startup company being founded in 2012 has been tagged as a unicorn, with 10.08% market share in data warehousing or data cloud. It ranked third in its very competitive industry behind SAP Business Warehouse and IBM's Apache Hive, which has 15.42% and 11.03% market share, respectively, per DataNice. Moreover, as a native cloud platform, Snow's technology is an ideal to take advantage of the primitive capabilities, features, and APIs within the respective cloud to create the highest performance, lowest latency, and most efficient services possible. With that being said, the San Mateo, California-based tech company is not just a regular startup, as it competes with the heavyweights like IBM, Microsoft, and Amazon. It has a revenue growth rate of 174% in fiscal year ended January 31, 2020, and having a year-over-year revenue growth of 133% in Q2 of 2020, when it generated a revenue of $241,960,000, up by 137,916 compared to 2019's Q2 of 104 million. So it just showed to us that this company really a disruptor on this evolving industry. What interests me as well to know is the increasing gross margin of 62% in Q2 from 56% during fiscal year of January 31, 2020 and 49% in the same quarter last year. So this increasing gross profit margin impliedly tell us that their management is doing their cost management effectively. That is, they have the capability to negotiate the rates, lower rates as much as possible among their direct cost provider as a cloud platform, a multi-cloud platform in Amazon Web Services, Google Cloud, and Microsoft Azure. With a current ratio of 1.66 in its most recent quarter and total ratio of 2.13 suggests that the company is pretty liquid, having more than $1 to pay off its debt as it came due either short-term or long-term. Debt-to-equity ratio will be improved significantly after this offering from negative position due to cumulative deficits. 2.20 as stockholders' equity will become $3.4 billion against their small debt in Q2 of $673,098,000. To me, that was just an amazing financial position which Snowflake can take advantage for its general corporate purposes. Accordingly, they shall use that portion of the net proceeds to acquire a complementary business, products or services or technologies of the same kind. No doubt why Warren Buffett had bought this expensive growth stock, which is unusual to his investment strategy as a value investor. Though he once said that growth is also a value. Indeed, as adoption of cloud data and services is inevitable since it gives each organization significant cost savings instead of having their on-site database. It has a value-added activities on computing to data availability, which is crucial to big businesses' analytical process for next business opportunity or to dig data for any business opportunity ahead. It also helps them on managing customer relationship, delivering engaging and personalized customer experience. Moreover, according to IDC, cloud-based workloads is growing at compound annual growth rate of 27%. That is, from 33 zettabytes of data in 2018 to 175 zettabytes of data by 2025. Meanwhile, the public cloud is becoming a new center of gravity for data. According to IDC, 49% of data will be stored in public cloud environments by 2025, an increase from approximately of 30% from today. Additionally, according to 2019's IDC report, 90% of Global 1000 organizations will have a multi-cloud management strategy by 2024. With this, it gives a significant growth opportunity to Snowflake, being one of the leaders in data warehousing, compounding, and cloud services according to Gartner. So, a Snowflake stock a buy. With bigger and increasing gross profit margin, double-digit market share, the growth of cloud industry along with fundamentals on liquidity and solvency, particularly the effect of IPO proceeds on its balance sheet, excellent executives who has expertise on cloud technology, definitely Snow is a strong buy. Not because the hype of Warren Buffett's investment, but its capability to be profitable in 3 to 5 years or in just short period of time. As big chunk of its Q2 operating expenses is sales and marketing, which is 79% to its total revenue, an improvement from 132% in Q2 of 2019. So you can see it that they have managed their cost now. While R&D is also down to 29% of total revenue from 46% of total revenue last year. It shows to us that the company had started to benefit from this investment on advertising, public relations, and other marketing activities. Though I personally believe that they need to continue the research and development as their competitors have the resources to duplicate of what they have. Even actually, Google or Alphabet, the parent of Google, Amazon, and Microsoft can pose a challenge against them. In conclusion, having Snowflake on our portfolio as soon as it starts trading is a good move, which can be held medium or long term. But I personally would set an entry point of $90 to $110, holding it long term with no definite target selling price, because I'm going to hold it long term or until it will declare a dividend, as this stock can provide strength to anyone's portfolio. But as expected that it would sell more than its IPO price, I'll be waiting also for its pullback, particularly once its lockup period among its insiders is over, which is the 91 first day after the release date of their S1A prospectus, which could be around December 8, 2020. So that's all for today, guys. So if you like this video and you find it helpful, please click that subscribe button and that like button so you can help this channel to grow. And if you have some comments or questions, please drop that comment below and I will answer it right away. See you next time, and also don't forget your notification bell so that you'll be keep updated on my upcoming videos. Always remember that I'm dropping a video once or twice a week.